That refers to the extended period of time that an asset is held. Depending on the type of security, a long-term asset can be held for as little as 1 year or for long as 30 years or more. Generally speaking, long-term investor for individual is often true to be in the range of at least 7 to 10 years of holding time, although there is no absolute rules. The length of the time that designate a long-term asset is usually a security behind held of at least a year. Long-term is a subjectible term that depend on the investor. However, selling an asset that is held for less than a year will have different tax consequences than selling it after holding it for a year or more. A long-term investment can recorded on an asset side of a company's balance sheet as investments. Short-term investments are market to market, and any decline in their value are recognized as loss, where increase is not recognized until it's sold. A long-term understanding of the long-term investment. So long-term is one of those phrases that is so ubiquitous in the finance that has a different difficult to pin down specific meaning. The media frequency advise people to invest for the long term is because they determine whether or not an investment is long term is very subjective. A day trader, for example, would define a long term much differently than a buy and a hold investor. For the day trader, a position held overnight would be a long term commitment. For a buy and hold investor, anything less than several years may be considered as a short term. Long term investment for companies. Long-term investment is found on the asset side of a company's balance sheet, representing a company's investment including a stock, bonds, real estate, and cash that is intended to hold for more than a year. When a firm purchases a share of stock and another company's debt as investment, determining whether to classify it as short-term or long-term affects the way those assets are valued on the balance sheet. Short-term investments marked are market to market, and any decline in their value are recognized as losses. However, increase in the value are not recognized until the item is sold. This means that classifying an investment as long as short-term has a direct impact on the reported net income of the company holding the investment. Analysts look for the change in the long-term assets as a sign that the company any liquidating to cover current expenses. Generally a problem if it continues. A long-term investment for individuals like saving or investing for retirement represents their main long-term project. While it is true that there are other expenses that require a multi-year effort, such as buying a car or buying or paying off a house, renting in the main reason most people have a portfolio. In this case, we can encourage to start early and invest often. Real estate is often considered to be a long-term investment. Individuals that buy a house usually sell it to many years after they have bought it, or they own it until the mortgage is fully paid off. Profitable securities sold after a year they are subjected to capital gain tax as opposed to the ordinary income tax for securities sold out under a year. Stocks, mutual fund, and exchange trade funds can either be long-term or short-term investment depending on how long they are held. An individual can buy a stock and sell it if it is appreciated in a few weeks or months. Uh, Conversely, the same stock can be held for years and sold it um, if it has appreciated even more. Using both long-term outlook and the power of compounding, individual investor can use the year they have been between themselves and retirement to take a prudent risk. When your time horizon is measured in decades, markets downturn and other risks can be taken for long-term rewards for high overall return. So long-term investment are any security that are held for more than a year. Generally, these can include stocks, bonds, real estate, mutual fund, and exchange rate funds.